The views expressed in this podcast are not to be taken as either trading nor financial advice. Neither the announcer nor the Sirius Report make any claims to be certified financial advisors, and all reporting is dedicated solely towards being both informative and educational. Greetings, everyone. Good afternoon. Welcome to the Sirius Report Market Wrap-Up for Thursday, November 7th, 2024. We're going to take a look at some of the economic data. There's not a whole hell of a lot. Yesterday was pretty exciting, especially in equities, the bond markets, and across the board because of the outcome of the election. But the one thing we are going to focus on is the potential of why gold and silver got horrendously slammed, and the answer might have come out today. So with this in mind, let's go ahead and take a look at how everything fared in the markets. Well, after being up 1,450 points yesterday, the Dow decided to take a little breather. It ended up and down quite a bit, a lot of volatility, but in the end, it was down 0.59 points. That's right, less than a point, and not even a phase into the percentage. Closing out the day at 43,729. Meanwhile, the Nasdaq decided that it wanted to continue its rip-roaring move, and was up 286 points to 19,269, a new all-time high. S&P 500 was up 44 points to 5973 and knocking on the door of 6,000. In the bond markets, well, after yields spiking, inflation hiking, and the expectation that Trump is going to try to impose his will on the Fed to lower rates back down to near zero, yields had spiked up to 4.6%, 4.7%, and 4.4% respectively on the 30, 20, and 10-year. But today we had a little bit of a pullback. Yields dropped across the entire yield curve, with the 10-year closing out at 4.328, the 20-year at 4.636, and the 2-year at 4.199. Now, the 2-year and 10-year still remain more than 10 basis points difference between the two, but it is appeared to be more inverting than steepening. Taking a look at the dollar index, well, after a monster move up to about 105.5, it came back down to earth today. The dollar against a basket of Western currencies on the DXY was down 74 cents to 104.35. And gold, which had gold and silver, gold had fallen back to the 2,600 handle, silver back to below 31 at 30.85, ended up gaining about $48 respectively for gold, closing out the trading day at 27.08, while silver was up 82 cents, closing out at 32.06. In the crypto markets, crypto loved the Trump win. Had gotten as high as 77,000 yesterday before a little bit of a pullback, a little bit of volatility. We had over $2,000 in difference in the last 24 hours, a high of 76,945, a low of 74,481, but inevitably it was up 0.59%, closing out the last 24 hours trading at $76,083 per Bitcoin. Ethereum, meanwhile, was up a whopping 6.33%, closing out at 28.96. In the oil markets, oil had a decent day. WTI was up 50 cents to 72.19, while Brent crude was up 64 cents, closing out at 75.56. Now, what is one speculation of why gold and silver got monkey hammered yesterday so that the shorts could have a chance to cover? It's because, as we expected, the Fed cut rates. Federal Reserve cuts rates by 25 basis points, and they removed the dovish inflation language, meaning what they had just a month ago, talking about the potential of inflation slowing down, that has been removed. Let's see if there's anything up particular. The market had fully priced in the cuts. Well, the market prices in everything with all these all new all-time highs going across the board. You would think it was 1999 and the dot-com bubble. But here's what came out of it. Fed lowers benchmark rate 25 basis points to a 4.5 to 4.75% range. Fed says risks to goals remain roughly in balance, which doesn't really mean anything. Labor market conditions have generally eased. No dissent on the rate cut decision. So we shall see what comes of that, but inevitably the Fed appears to be on the course of Arthur Burns rather than the course of Paul Volcker. Some economic data for today. Continuing jobless claims jumped to a 3-year high. While initial jobless claims ticked up modestly last week, with seasonally adjusted claims hovering around 221,000, the continuing claims, thanks to the hurricane, are at the highest since November of 2021, leading into, of course, the lockdowns. Well, actually, we were in the lockdowns, but leading in to the tail end of the lockdowns. Finally, one thing I wanted to touch upon, it's something many Americans likely don't know, and many foreigners probably don't know this either, but when the 13th Amendment of the Constitution was passed, it was believed to have abolished slavery. That is incorrect. And the wording of the amendment says it right there. It abolished private ownership of slaves, but the public can own slaves and utilize slaves all they want. And they have done so for probably the last 150 years, 175 years since the 13th Amendment was put in place. Now, what do I mean by slavery? Well, I'm talking about incarcerated individuals, forced prison labor. Now, this is not usually imposed at the federal level. It's available for the state to go ahead and do this. And there are a number of states, I think about 16, that currently allow forced prison labor. One of those is California. And while California voted against electing Donald Trump for the presidency, they did vote a new referendum that allowed the continuation of forced prison labor. So, if you want to think about it, in California, they aren't for free enterprise, but they are for forced prison labor, aka public state-run slavery. Get that in your head as you wonder when liberals talk about independence and freedom. Anyway, that's pretty much all that's going on today. Yesterday, of course, was a big day in the markets with Donald Trump winning the election, but that's usually what happens on the single day following the elections because the speculation and the money involved in that is so high. But with that in mind, Paul and I we did put out a podcast today. We got one scheduled for tomorrow, and then we're going to record 3 of them to go through the weekend. So once you go ahead and look forward to that, we're going to take a look at some fascinating things, some ramifications of what the election has done primarily for Europe, for the Ukraine war, and we're going to see about another topic that I can't think of off the top of my head. But with that in mind, as always, want to thank everyone for being a part of the Sirius Report community. Don't forget to subscribe, like, share, comment. Send this out to anybody you think would be important. And until the next time we get together, have a great Thursday.